The question of the day is a fairly straightforward one. Who's in charge? Who's driving this narrative? Is it the central banks? Or is it the markets? But I think it needs to be a little bit more nuanced than that. I think it needs to be which markets and then which jurisdictions, because I think if you're looking at Europe, for instance, I think the govie market is more important, certainly when you look at what is happening on the peripheral markets. But credit on both sides of the Atlantic, I think, is absolutely front and center here, and now starting to react. And I think the credit channel is certainly going to be very important for the Fed, less so maybe over here in Europe, where the bank channel certainly dominates. So let's kick this around a little bit. Let's try and figure out exactly what's going to happen and maybe set ourselves up for another interesting week. Kristine Aquino joining us, as is Bloomberg's Vince Cignarella. Kristine, let me start with you and let me pose that question to you. Central banks in charge or markets are in charge? And if we're talking about markets, which markets?
Well, Guy, I think it's very much markets in charge, and specifically the short end of the market is the part of the market that's pricing in all these rate hikes. We've seen this time and time again push central banks into a corner and getting them to respond to it. We definitely got that from the ECB and BOE last week. Definitely more aligned with the markets when it comes to a more hawkish sort of path for policy moving forward. And, you know, that's filtering through to the rest of the markets today, particularly in the periphery, where we're seeing Italy and Greece under fire specifically today because of the aftermath of the ECB shift to a more hawkish regime, for instance.
All right, Vince, do you agree with that take? And if so, where else are you seeing it other than the bond market?
Yeah, I totally agree with what Kristine is saying, and thankfully it is the markets leading. Central banks, when central banks lead, we tend to see mistakes because their forecasts, unfortunately, are not very good. And we've seen this before with the Fed, where they raised 4 times, only months later to have to cut 4 times. Because they anticipated too much inflation, and then growth slowed and they had to come back and ease again. I think this is really positive that the markets are leading. What I would hate to see is March, the Fed raised by 50 basis points to try to take back control of the market. They don't really need to do that. They can follow along nicely. And I think, as you said, where we're seeing it is mostly, as Kristine said, the front end of the curve. We're seeing some flattening. I'd expect to see flattening continue. And we're only seeing about 45 basis points in 5s, 30s. I think that can shrink even a little bit more as the shorter end really needs to price in the Fed. The back end that right now doesn't need to be that aggressive.
Vince, the critical channel for the Fed to watch is the credit channel. Thus far, we haven't seen that much impact into the credit channel. We're starting to see it show up now. Is that something the Fed, to your point, is going to have to lean in on? You say you'd hate to see them have to go 50 just to try and regain the narrative. But if the credit market starts to crack, will the Fed be in a position where it needs to take a different course of action?
Well, I mean, hopefully the crack will be a small crack. You know, I mean, there's obviously would be some expectation that the credit markets will suffer a touch as rates go higher and people step back looking for higher yields, more attractive maturities, et cetera, to step in. But I think the credit market's going to hold up just fine. I think there's, you know, even if rates back up a little bit, put a little pressure on credit, there are going to be some very attractive yields in that market to attract investors, especially as we see treasuries, I think, lagging a little bit at this point. You know, we've had a huge move in 10 years up above 1.9%. I don't feel like that has a lot more to go at this point. You know, 2.10 perhaps, but when you start to see you know, taxable munis start to rates show up very attractive credit, the corporate bond market shows some attractive credit. I think that will bring investors to the market and keep the credit markets in balance.
All right, Kristine, on that point of relative attractiveness, how much higher can yields go before they actually start to spell trouble for the equity market and maybe call TINA into question?
Well, Kaylee, that is the big question, isn't it? I mean, we have seen, for instance, earlier this year being thrown around levels around 2% for 10-year Treasury yields as a potential pain point for tech stocks in particular, which we saw did bear the brunt of the earlier sell-off in the equity market. But, you know, we're heading towards levels that could get past that 2% mark. And so I think it is a question of what's the trade-off, you know, in terms of how much further where yields could go in above, for instance, earnings yield or other metrics that equity investors tend to look at when trying to make that decision between whether they're going to go for equity still or whether they're going to go for bonds. And so that's going to be definitely one to watch out for, and potentially something that we could see as soon as the next couple of weeks if this sort of price action continues.
Okay, Kristine. The other Kristine Lagarde, the president of the ECB, is going to be talking at the top of this hour. She's going to be delivering testimony to the European Parliament, taking Q&A. Does she push back? Does she change the narrative? Does she try and push the markets after today's price action in BTPs and Greek bonds? Does she try and push back this idea that the pivot at the ECB is now underway? Does she talk about spreads? She's on really dangerous ground here. Do you think she goes there?
Well, Guy, I think that's what markets are going to be watching out for sure. I mean, we have seen a tendency from the ECB to, especially in the aftermath of a big rate decision, such as the one that we saw last week, to add some nuance to the messaging in the weeks after that. And so that's definitely what we're going to be watching out for. How much of a pushback is she going to mount against the price action that we're seeing in markets, and whether she will acknowledge the spread? We have seen her time and time again do this to some mixed degrees of success, shall we say. It is quite a tricky communication challenge, especially when bets at the moment are at these levels.